What's going on, everyone? 78% of stocks in the S&P 500 closed down in the red today, as there are a whole lot of very big and very important events developing around the world right now. So you better stick with us because we have a lot to cover. Not only are oil prices ripping past $74 a barrel, as there are some serious developments, we'll call them, happening in the Middle East right now, but chaos is slowly but surely building at U.S. ports, and Chinese stocks are cooling down from their second largest 10-day gain in history. So again, we have a lot to talk about today. We're going to cover some great setups, some important news for tomorrow, and everything you need to know to end this week on a positive note. But besides that, Tom, let's get right to it.
Yeah, Mike, the S&P 500 gapped down this morning, actually, and then guess what? It filled the gap. I know a lot of people were playing that gap fill this morning, but there was a lot of fear that ended up coming into the market today as Biden actually ended up commenting on this whole Israel-Iran situation, and he ended up talking about Israel's retaliation against Iran. And Mike, it looks like Israel's going to be looking to target possibly the energy infrastructure. I know that we talked about this a little bit yesterday, but it started to really incite a lot of fear whenever Biden wanted to comment on this, right? So I don't know, it ended up making crude oil shoot up quite a bit. I did see some stuff in the articles here where they do say that OPEC Plus has some spare oil capacity where they can try to keep crude oil prices lower, obviously, by kind of flooding the market with what they have on hand. But at the end of the day, Mike, crude oil had a great day, right? It looked like they didn't keep it down today, that's for sure. It was up 5.39%. And whenever we go to the daily chart, it's starting to bounce up in a fantastic way here.
Yes, and there are a lot of important things to keep in mind. As we all know, earlier this week, Iran did do an attack towards Israel, and everyone's just been kind of waiting on the sidelines, seeing how Israel is going to retaliate. And we've seen many situations over the past year or so where everyone's just waiting on the sidelines, waiting to see how these conflicts will develop. And in terms of an oil market perspective, there haven't been any insanely crazy events until now, because oil prices themselves are moving up in a way that we just haven't seen in the recent short term. And what this ultimately goes to show is that market participants are expecting a retaliation given the way oil is moving. We're seeing a strong bid here as oil prices are, moving to the upside in a momentum-filled way, and this directly translates to people expecting, problems from this situation. Some other things to keep in mind is that Israel has definitely been going off lately on multiple different fronts, especially in Lebanon, so they might be seriously looking to target Iran's oil infrastructure in a serious way. And then on top of that, Israel's Prime Minister Benjamin Netanyahu said that Iran will pay for their big mistakes. So to summarize everything, there are some serious risks going on in the Middle East right now that can have big effects on the world economy, because the price of oil is extremely important, as that translates to prices worldwide in many different ways. On top of that, if we did see a broader escalation, not only in this part of the world, we could also see more conflicts rise in the Strait of Hormuz, which can just disrupt the already fragile logistics and supply chain around the world. So, long story short, there is some craziness going on in the oil market.
Yeah, there really is, and I'm loving the way that oil's setting up, too. It's all coming right as crude oil is bouncing off of key support, and we're starting to see some great oil stocks moving higher, right? And Mike, one of the big stocks that we've been talking about a ton lately is XOP. This is a huge ETF. They have a ton of oil and gas stocks within this ETF, and it's been bouncing very well off support, and it's starting to break out in a major way, up 3.29%. We just had a crazy big money play on this one recently too, where they put $6.8 million into the 135 strike calls, and everybody out there's like, wow, I wonder how much they're up right now. This is $6.8 million. This has been flying. They're definitely happy with it, but I know a lot of the traders who took the big money play are also very happy.
Oh yeah, and that big money trader is still holding their position. So that's pretty exciting to see. So continue to keep a close eye on oil stocks going forward. Tickers like XOP, XOM, OXY, CVX, and others are one of many, many oil and energy related stocks to keep on watch. But another area of the market that has been very important lately is the Chinese stocks, or the Chinese stocks. Basically, looking at this situation, Chinese stocks have had their second best 10 trading day stretch in history, and this is pretty exciting to see, especially because the big money just hit it out of the park with these stocks as well. But looking at this data more in depth, we could see that looking here, we could see situations in the past where Chinese stocks have had just extraordinary gains, and we can see that especially in 2008 when they made like such large forward progress, when they moved in a way with such strong positive bullish momentum, that also brought upon further bullishness going forward. We could see on the 1, 3, 6, and 9 month time spans that bullishness brought upon even more bullishness. And while that was great to see, I still think Chinese stocks are a little bit overbought in the short term, but just because they're overbought, there could still be many more opportunities to playing, I guess you could say, the broader uptrend at hand.
Yeah, I agree, Mike. It's very interesting to see data like that, and it's awesome that we're able to get these types of charts out here because it's amazing to see this type of data, and it does go to show that like over the longer run here, you do generally, at least when when China stocks pop up a ton, you do generally see that green come in, especially from 6 months onward. The thing that does worry me is that there was some situations in '08 where it was red on like the 1 month and 3 month time frames, but then once you got to like 6 months to 9 months, they ended up coming right back, and maybe that was just a period where they cooled off. And right now with how high these China stocks are getting, I'm kind of worried that they're going to start cooling off. But we might just have a short-term pullback and then a larger, broader run. But I will say, Mike, I mean, it's been one hell of a run so far with these China stocks. I would not be surprised if they continued in the short term, but I am definitely getting a little bit worried in the back of my mind about this huge move and it being too overextended.
No doubt, and rightfully so, right? Because these stocks have just been ripping. But when we look at a ticker like FXI, right now it's right around that like $34.60 area. Ideally, I would like to see a pullback around to 32 or maybe even lower. But realistically, it'll be important to just constantly I guess you could say monitor the setup and situation as it progresses and wait for the time where, the pullback has happened and we're starting to see like it start to uptrend again. That will be like the true tell as to when like the opportunity will be better. So either way, let's keep a close eye on Chinese stocks, but don't get too greedy here because the move has gotten a little bit too crazy than it should have. But another thing that is just so important right now is what's going on with the port strike. This has been some of the biggest news over the past week, and rightfully so. Basically, with this port strike, things are still holding up fine so far. We have some shortages here and there with toilet paper and other things as people panic buy, but the good news is that companies have kind of prepared for this port strike by loading up on inventory ahead of time. And while that's good and while it solves the problem in the short term, this solution will only last so long because if this port strike does not end within hopefully like a week or two, there will be some serious problems. So keep this in mind.
Yeah, that's really the big thing here to me is that whenever the ports are shut down, the longer they're shut down, the more that those backlogs are just going to keep stacking up and the worse it's going to get out there, right? And I'm hoping that this comes to an end sooner rather than later, but at the same time, Mike, I kind of don't, I actually would kind of like the volatility out there. I'm not going to lie. I think it could be making for some fun trading opportunities, but I don't want like the economy to be burdened or anything like that too bad. So, there's some give and take there, but at the end of the day, there will be some opportunities here. Obviously, there's some weird stats that I saw whenever I was scrolling through this, Mike, and I know Walmart has some pretty interesting stuff going on where they're actually anchoring vessels and they're just essentially stuck in the middle of the ocean with nowhere to go, right? And they're just waiting for these ports to open. But it was pretty nuts to me how Walmart had such a significantly more amount of anchored vessels compared to the others. Obviously, it's hard to maybe ask why that is, probably because of how much they deal with goods and everything. But at the end of the day, it's just very interesting.
Yeah, and then like some companies are finding like short-term solutions to the problem, like using air freight and even going to other ports, but there are a lot of problems with that as well besides the increased costs. Like there's problems with container, I guess containers just like getting lost and unorganized because, when you have a situation like this, it's just chaotic and messy. The main point is that the longer this goes on, the exponentially worse it will be, and it truly does not surprise me that we saw nearly 80% of the S&P 500 down in the red today. Like, that is not something you want to see. And while there isn't widespread panic right now, I cannot emphasize enough that there is some real risk, not only to the stock market right here, but also the economy. Because as we know, Jerome Powell made a pretty bold move the other week by doing a jumbo 50 basis point rate cut. And by doing that, he was basically kind of, exposing himself to a extended or a second leg of inflation. So if we do see a prolonged port strike, that will have a, upwards effect on prices and inflation in general, which again is exactly what Jerome Powell does not want to see. So let's continue to monitor the situation closely. I will also keep a close eye on Walmart going forward, as they do have a lot of exposure to the situation at hand. The stock has held up fine so far, but again, the solutions that have been put in place by all companies are only like short-term band-aids. They don't fix the root problem at hand.
Yeah, they really don't. And Walmart is one of those companies that has a lot, going on here. They have a lot of stuff stuck on the water, like we were showing. And we also had a recent big money play with Walmart too, entered on September 17th. Mike, I'm almost thinking maybe the big money was foreseeing something going on here with these strikes. They actually had a great entry whenever they entered on this play, but the thing is that you just have to give these plays time. There's actually a good double top on Walmart right now around this $80 to $81 resistance, so I'm going to keep monitoring that in the short term. As long as that holds up, that could actually be a really good area for a stop loss. If you guys were going to maybe look to enter into a big money play now, that would actually be a decent spot to maybe stop out at. You could target, I would say, pretty well to the downside considering how much Walmart has popped here.
Yeah, and like the reward risk profile that you lined up definitely is solid, and it's definitely worth considering. And another thing is like, if someone was a little bit more hesitant, there's nothing wrong with just like sitting on the sidelines and waiting for that bearish price action to come in to act as a confirmation before, placing a trade. But either way, we will continue to monitor this situation closely. But Tom, how are we looking on SPY? What are the key levels, charting points, and analysis to know for tomorrow?
Yeah, look at that daily chart here. Looking at it on the daily, it looks like SPY did nothing, right? Definitely a type of consolidation day. But whenever you go to like a 5-minute chart and you start to zoom in a little bit more, there were some decent moves today in general. Firstly, SPY had a pretty good gap down this morning, and we ended up straddling that 566 to 565 support once again, Mike. That held up again. It's been holding up all week, and hey, if you guys targeted that today, maybe as like a buying point or something, there could have been some great opportunities there. So I'm going to keep watching that area tomorrow. 565 to 566, major support. If we break below there, I'll be targeting 563 and then 560 as SPY drops. To the upside, I'm watching watching 568 and then at 570 as the major areas of resistance. If we get a good breakout tomorrow, we start breaking that 572 and 573 after there, but we really need to break that 570 mark for me to become more bullish in the short term.
All right, sounds good. Well, besides that, we also do have some economic events for tomorrow. 1 hour before the market opens, we have non-farm payrolls and unemployment data set to release, so be ready for that. This can move the markets a little bit and add in a little sprinkle of volatility. And then on the earnings front, we are basically all clear. Ticker symbol APOG will report before open, but I'm not sure anyone even recognizes that ticker. So besides that, let's get right into some setups and predictions. A stock I'm watching very closely is still ExxonMobil to the upside. I talked about this one a decent amount throughout the past week, as there's just been a lot of attention with oil stocks, and we talked a lot about why that is. Either way, ExxonMobil is still on my bullish radar, and it has been moving in a pretty nice way.
Yeah, I love it here in the short term. There's a good resistance. If we see another breakout tomorrow, I'm sure that oil could go on another run, especially considering crude was up 5% plus again today. So definitely a fun sector. With my next stock, Mike, I'm looking at Palantir again. How could I not? It's up 4.67%. This stock continues to just have massive breakouts here in the short term. If we go to the daily chart, Palantir is actually at new yearly highs, and not quite to all-time highs, though. Whenever you go back to the highs from 2021, the all-time high is more around that $45 mark. But either way, it's approaching those highs. I just wanted everybody to be aware in the short term. There's a lot of good momentum. I'm going to keep watching it up into that $40 mark. But, Mike, whenever you go to the heat map on Bookmap here, $40 is definitely the next major level. And looking at $40, I mean, I love this $40 level, Mike. There's 477,000 shares stacked up at that level, and even at 39 there was like 124,000 there towards the end of day, so watch that a little bit tomorrow as well. But $40 is going to be major if we're able to see that break. I'm sure Palantir can continue up in the short term, but if you are long Palantir right now, which I know a lot of people are, just be aware of this level. We might end up seeing a bit of a pullback.
Yeah, it's a big psychological level as well, and shout out to you, Tom, because you were hitting on this one pretty hard yesterday, so shout out to you. But with that being said, another stock that is on watch is JP Morgan, and it is to the downside. JP Morgan has been continuously showing some bearish price action over the past couple of weeks. It's been making lower highs, and it is just weakening a bit, which is great to see. This is another stock that we've been hitting on quite a bit over the past couple of weeks, and it is continuing to move in a bearish way. It is still on my bearish radar, and I would love to see a retest, at least like an initial retest of right around like 202 to 203.
Yeah, that would be awesome. And then after that, the big psychological levels coming up around 200. So I'm definitely going to be watching JP Morgan as well. With my next play, I'm looking at Win in the short term. This stock has been flying up with the China stocks here, as they have a lot of exposure actually to the Chinese markets. I'm sure a lot of people do know that about Win, but for the people who aren't up to date with the casino stocks, Win does a lot in China, to say the least, right? A lot of these companies actually do. But they were up 1% today. You can see they've been flying up on the daily chart with the China stocks, and they just broke $100 again today. So if they end up breaking above the high of day for tomorrow, I'll continue to watch Win to the upside. There's just a lot of momentum here, but I will say it's more of a scalp at this point because they are up so much. I don't want to necessarily swing something that is this overextended, but in the short term, this momentum's great with the China stocks.
Sounds great. All right, well, besides that, Tom, it is now about that time for today's momentum plays. And with the first one, we have HAL to the upside.
Yeah, Halliburton did pretty well today with the oil companies. If they end up breaking above $31, then keep watching them up as this hype stays on the energy stocks.
All right, with the next one, we have CLOV also to the upside.
All right, now this one's a pretty crazy stock, but in the short term, Clover Health has been popping off, and there's a great resistance right around this $4 mark. So if they can break out above like $4.03 to $4.05, watch this one to the upside tomorrow too.
All right, and then with the last one, we have Apple for both directions.
Yeah, AAPL is sitting right on a major support. If they end up breaking below the 223 area, then watch Apple to the downside. They did have some news today, and they popped up a little bit towards close. If they're able to break above the 227.50 resistance, then watch them up.
Sounds good. So we have the upside level for a potential move higher, the downside level for a potential move lower. That's for Apple. And then don't forget about the upside levels with CLOV and HAL. But either way, these three stocks are on watch for potential momentum plays tomorrow, if and only if they break through the levels Tom listed. The stronger they move, the better the setups become. But besides that, it is time for the good stuff, which is today's $775,000 big money trade. And we are looking at ticker symbol MPC. So MPC is Marathon Petroleum, and as I'm sure many of you could guess, that certainly has a lot to gain with increasing oil prices. More specifically, the big money bought the 175 strike calls that expire on March 21st of 2025. So these options have a lot of time to them, and while the setup is good, and while there's a lot of reasons for oil to continue to move higher, if you try and day trade this tomorrow, understand that that would not be following what the big money's actually doing. These options have until March of 2025. If you are going to follow them, you have to make sure that, you align with that thesis. What this stock does tomorrow at open or next Tuesday doesn't really matter. These options have time. I like the reward to risk setup, and I'm excited to see how they do. But again, make sure you give them the time they need.
Yeah, I mean, I hope that they pop up tomorrow, but if you do enter this play, I think it should be something that you hold for quite a while. And Mike, I think it's actually more lucrative to give it more time as well. Like these I think have some really good potential to pop off, kind of like the XOP play. But whenever I look at this chart, it's awesome. There's a great support around that 160 mark. It's holding it very, very well. I would say it's a little far away to maybe use that as a stop on these, but whenever I'm watching MPC, it could end up maybe channeling for a little while, maybe consolidating before the real breakout. But I think that what we're really trying to accomplish is a really good break of that recent high around 184. I think it would be awesome to maybe catch a move up into like that 190 plus range with MPC, but that will take probably, a lot of patience to hold that long. But I think that these oil stocks, they can definitely swing a lot, and you can tell that whenever MPC runs, it runs quite a bit. A target to like 185 to 190 is honestly nothing compared to some of the moves that this stock has had in the past.
Yeah, so either way, keep it close on watch. There is a lot going on in the world right now, especially with oil. So keep this stock on watch. But if you guys are new to the channel, consider obliterating the subscribe button to get our videos recommended to you more often. Every single day, we cover the most important news, charts, setups, important events, earnings, big money trades, and everything you have to know about the stock market in like 20 to 25 minutes or less, usually. We had a lot to cover today, so it was a little bit long. But consider joining the StockedUp crew, and you'll get our videos recommended to you more often by subscribing. We also want to give a giant shout out to today's member of the day, Corey from Philly, who had a great post in the Profits channel today where he said it's his first ever $900 plus green day thanks to the Discord exponentially. So awesome screenshots there, and keep on rolling. It's great having you in the community, Corey, and again, keep on rolling. It's great to see screenshots like this. Besides that, though, guys, we have one more trading day left to the week, so let's end it on a great note. The keys to do that are to focus on the most fundamental trading habits. Have stop losses, follow the money, respect your stop losses, trade in a disciplined way, don't force setups if they're just mediocre, and, trade with a disciplined mindset, right? You can learn a lot more about this in the trading floor with the first link in the description in the comments down below. But besides that, that is all for today's video. Thank you all so much for watching, and let's end this week on a green note.